Welcome everyone to our monthly webinar. As we have mentioned several times in the past, we like to get ideas from clients about what questions or topics they have that are of interest to them now. It can either be something timely or as in the case for today, it can be something that people have just brought up before and doesn't have necessarily a current event to it, but that is something that people want to know more about. So today's session around how to read your Schwab statements and learn more about what it is that you're getting from us or from Schwab periodically was directly inspired by a couple of clients who just had that question. So that always means to us that other people want to know about it too. So we're excited to share some information about that today. I by the way, just in case you don't know my voice, I'm Quinn Arnold, and with me today is Matt Hilland. Matt is our webinar guy extraordinaire. So Matt will be walking through this today. I will be staying in the background watching the chat. So if you do have any questions that you want to raise, just click the chat button and put them in there. Otherwise, Matt and I will also stay on at the end. We can answer questions at the end of the brief presentation here. And if there's something that's more private or confidential, we're happy to take that conversation offline and follow up with an email or a phone call. So with that, I will turn this over to Matt for our topic of the day.
All right, thanks, Quinn, and thanks for everyone for joining us today. Like Quinn said, this was a request for a topic from a few different clients, and so the details I'll focus on today are primarily focused on questions that we've heard in the past or that have come up in the past. But if we don't cover what you have a question about or some things you've wondered about on your statement specifically, just don't be afraid to ask either here or just over email or in our next meeting. We'll be happy to get back to you. But you receive both monthly and quarterly statements from Schwab. We're going to start by looking at the monthly statement. This monthly statement is sent directly from Schwab automatically. So this is not something we have a hand in normally. Most of you receive these over email, but you can request them to be sent through the mail if you'd prefer that option. If you'd like to make a change on how you receive those or any communication from Schwab, really just let us know and we can easily change that to electronic or through the mail. But know that Schwab keeps 10 years of these documents on hand for you and us to access. So don't feel like you have to keep all these if you don't want to. They'll not be needed for any tax purposes ever. There's really no real reason you have to file these away unless you just really like to be able to review the paper copies of these over time. But as a reminder, if you have been building up copies of these statements over the years and want to securely get rid of them, we have a shred service here at the office. Feel free to just drop off paperwork for shred, and we'll be glad to take care of that for you. You have access to 10 years of history of these statements. You can get that online by logging into your account, just as shown here, and right on that main menu is a button for statements, and that'll get you into any tax documents or any monthly account statements up to the last 10 years, or just let us know what you're looking for and we're happy to retrieve that for you. But to get into the details on the monthly statement, a lot of this might be self-explanatory. Like I said, I'm just going to run through a few areas that have caused questions for clients in the past. On the first page is just a quick summary detailing two main items: your account balance and then a high-level view of why your account changed in value over the last month. And so for the first one, the general account balance, this should be pretty self-explanatory. The bottom number in bold is your total account value. So usually if you're looking for one thing on these statements, that's it. The numbers above that break down this balance. And so I'm going to go ahead and say we're never going to be shorting securities in your accounts. This is where you have to use leverage to bet on the value of securities declining in value. That's fairly safe to say always going to be a zero. The items above that, total investments long, is just the ETFs or mutual funds that make up your account, will probably be the majority of the balance. And then cash, bank sweep, and money market, just any cash that we're keeping in the account for you. Just so you know that if we've talked to you about keeping a certain amount of money in a money market, you might not see that whole amount in the top line here. You can see that split up in further pages that we'll look at in more detail in the next couple slides. But for a lot of you, the money markets that we use are technically mutual funds that we purchase separately. And so that gets grouped into that total investments long category. Just wanted to point that out because there's a few people we've talked about keeping, say $30,000 in a money market fund for spending, and then they don't see that listed out in this top line here and get concerned. So more than likely, any money market balance might be reflected in the total investment long category here. Let's see, the other information on this page is just a quick view of what caused the change in value of your account over the last month. Remember, this is a monthly statement, so this is just detailing over the last, say 30, 31 days or so. So if this was my December statement, the ending account value is the value on December 31st. Starting value is December 1st. Transactions and income is going to reflect withdrawals and deposits into the account, along with any dividends or interest you've also received from your investments. Income reinvested is going to show the amount of dividends or interest that was received and then immediately reinvested back into the fund. And this doesn't provide a ton of detail, but this will just give you a quick explanation for why your account is up or down for the month. And then I guess, of course, usually the biggest change is going to be change in the value of your investments. And so if the market's up, you can expect to see a gain here. If the market's down, you'll expect to see a drop. And of course, this is just very high level. The next few pages in the report are going to show the details, and the details can be a little bit confusing. So we'll look into that here on the next couple slides. The next section on your monthly report is another fairly high-level view of your accounts, but just a little bit more detail than that first page has. This first section is just breaking down income that you've received. This is either through interest on your cash, dividends from your investments, or capital gain distribution from your accounts. For most of you, dividends are going to be the primary source that are always shown here. Investment detail then starts down below. This is just a look at the cash that's within your account. And for the cash section that's shown here, Schwab uses the term cash and then also bank sweep. And sometimes how Schwab splits them out has always been a little bit confusing for clients in the past. And so you can think of cash and bank sweep as the same for all practical purposes. But technically, if money is listed specifically as cash, it's held within the Schwab investment account. If it's listed as bank sweep, like is shown here, that cash is moved from the Schwab brokerage account into partnering banks. And usually this is just Schwab's banking arm, but it could be others as well. This is done to provide FDIC coverage for your cash. And Schwab also says that they're shopping around for higher interest rates to be able to get you a little bit of return on your cash as well. Though, to be honest, right now, interest rates are so low with every bank account that we're not seeing a lot of benefit of that. But hopefully in the future, as we get back to normal with interest rates, that will be a benefit too. Both bank sweep and cash is money that's immediately available to you. As I said, for all practical purposes, there's no difference between the two for you. Where it sometimes gets confusing on this monthly report, especially, is if we placed a trade to sell securities right at the end of the month. So maybe just a day before this report's created. Since trades typically take 1 to 2 business days to settle, the proceeds from any sale might show up right away as cash. And then once the trades settle, that cash is moved to the bank sweep. And so in this image, all the cash is in bank sweep, but just depending on the timing of any trades we've done, you might see another line here just detailing cash. And it's been confusing for clients before trying to keep track of this movement of cash in the account. And so 2 sections down on your statement is a section called bank sweep activity. And that's where this is detailed. And if you want to follow along, this is where you'd go to see. Bank credit from brokerage just means that money was moved from your Schwab account to the bank sweep. So this will happen a day or 2 after selling a stock, if the proceeds are not reinvested in another fund, or after receiving dividends. Technically, this is just detailing how money's moving, around in Schwab, not really having an impact on investments that we're making or anything like that. Bank transfer to brokerage means money was moved from the bank sweep, so from those FDIC bank accounts into your Schwab accounts. This will occur when we buy an investment in your account. And so just for example here, there was a $150 purchase to buy a mutual fund shown here. So there was a withdrawal of $150 from the bank sweep into the brokerage. And just to show you how this gets matched up with other activity on your statement, I highlighted the $467 transfer on the 14th here. So if I see that, how would I know where that $467 came from? It's detailed in the transaction details section of your accounts. And so you'd want to look for a corresponding date, probably 1 day before, just it takes a day for money to move around. And you can see here that there were 2 dividends that were not reinvested that total up to that $467 total. And so that's how you can kind of connect all the dots here to see when you're seeing money moving around, just be able to find out where that money came from. Notice that there's 2 other funds here now highlighted in green that the dividend was reinvested, and that just means these funds paid a dividend and that was immediately used to just buy more shares of the fund. This total amount that was paid in dividends does not show up in the cash activity or bank sweep activity because it never actually hit as cash in your account. It was just immediately used to buy more shares of the investment. And so that gets detailed then in the investment activity section of your report. So if you see dividend for reinvestment, look at the investment activity. That's going to detail then how those dividends were used to repurchase more shares. And so just for example, that $41 that was in the transaction detail, we can see here that that $41 bought a certain amount of shares of that fund instead of going to cash. So just to summarize, because this has been a point of confusion for a couple different clients, if you're trying to track how all these transactions are flowing through your statement, in general, if you see the word reinvest, it means you need to go to the investment activity section of your statement. If you do not see the word reinvest, so maybe just dividend or capital gain or qualified dividend, go to the bank sweep activity section to see where that money was deposited. The only other section of this report that we haven't gone over yet is the investment details section. And I think this, out of any of them, is pretty self-explanatory. We haven't had a lot of questions about this, so I'll be very brief here. This just details the funds that you own, the number of shares for each fund that you own, and their price. And so you can see here, there are 6 funds listed, there are symbols, the number of shares that you own, price. And remember, this is the price as of December 31st in this case, or the last day of the month for the statement, and then the market value of those investments again on the last day of the month. And so that was just a quick look at the monthly statements there. We also send out quarterly statements. And so this is a document on your investment accounts that you receive from us. So you'll get an email, usually from just Quinn or I, that has a link for a PDF for the quarterly statement. Again, most of you receive these electronically, but a couple have preferred to get these, physical copy mailed to them. And so if you would like that changed up one way or another, just let us know. And we also keep these on hand for you. And so don't feel like you need to retain a bunch of these just in case. We can always pull up an old copy and get that sent to you if you ever need it. We've not had a lot of questions on these, but the style of these is a little bit new just in the last couple of years. So we wanted to do a quick rundown of the information that's on these and just kind of how to read that. The first statement, or the first page of the statement here, is shown. The big difference in these statements is that as opposed to the monthly statement from Schwab, this has a little bit more detail on performance. And so this is highlighted in the top left section. You'll see the beginning value of the account, the ending value of the account, and whether that change was due to a rise or fall in the value of your investments or contributions or withdrawals that you made from the account. Also note that for this report, this is going to reflect the total balance of all your household accounts at Schwab. And so if you, or maybe also your spouse, have multiple, IRAs or Roth IRAs with us, this value that's shown is going to reflect the value of all those accounts together. The performance then is listed as well. Again, this is performance of all the accounts together. Here you'll see 1 year, 3 year, and lifetime performance that we detail on the report. And the performance for longer term periods is annualized. And so just for example, the 3-year return here, this does not mean your total return over the last 3 years has been 12%. It means you've averaged 12% per year over the last 3 years. And then there'll be a comparison for an index below. This is just to give you a benchmark on how other investments have done. So for most of you, it's going to be the Barclays US Treasury Index, which is a snapshot of how bonds have performed over the same time. The chart on the top right is a neat way just to see how much of your account balance is made up from your contributions and then the growth of your investments. The dark blue line represents the net investment, or this is the value of the account when it was moved to Schwab, or the value of the account 5 years ago. So in this case, this is showing an account that moved to Schwab in early 2017, and initially the value of the account was just over $800,000. Over the last 5 years, this account has taken some withdrawals, which is shown by the kind of decrease in this net investment line here. Over the last 5 years or so, total withdrawals have been just over $200,000 in total. And you can see that just because now today that net investment line is just a little bit below $600,000. But the blue shaded area that makes up most of this chart shows the value of the account, which you can see remains over $800,000 in this case. And this is just showing that despite the $200,000 in withdrawals, the growth on the investments has kept that total account balance up, in this case, over $800,000 for most of the time. If your accounts are new to Schwab, this chart is usually not that interesting, just since there isn't much history, but over time, it's really fun to see the power of compounding growth, take over and watching the value of these accounts rise, compared to your net investments or even your withdrawals in some case. And lastly, the bottom of this statement, I think, is maybe a little bit more self-explanatory. It just details your asset allocation, how we've split up the investments that make up your accounts. And so again, this is a pretty high level look. So it's just looking at cash, equities, which is stock holdings, or fixed income, which also just called bond holdings. And so in this case, this client is 66% stocks, 32% bonds, just a little bit of cash. This gets detailed, the holdings get detailed out a little bit more in the next few pages. And so depending on the number of holdings, this might be a couple pages in your report. And again, this is combining holdings from all of your household accounts at Schwab. And so you'll see each fund, the cost basis, which is how much you originally paid for the investments. You'll see the total value, which is the value of that investment today. You'll see the gain or loss on the investment. That's just the difference between what you paid and the value today. The gain as a percentage term, and then the percent that investment makes up of your total assets at Schwab. And so just for example, this account holds a DFA international stock fund that makes up about 14% of all their holdings at Schwab. And you'll see this listed for each fund specifically. If some funds are newer holdings, you're not going to see a long-term gain on those, but over time, we tend to not trade very often in these. And so over time, you'll get a good feel for how your investments have performed over time and what, some of the larger holdings are for you in your accounts. The last section of this report details our fees that we charge on the accounts. And so it shows based on that total account balance, how that fee is, or how that account balance is charged based on the amount of assets that you have in the account. And so recall that this account was about $859,000 in total. Of that, the first $500,000 fits into the first tier of our billing, which is a 0.25% per year plus Iowa sales tax. And then any additional assets get charged at reduced rates. And so this will vary just depending on the assets that you have with us. But it shows you that as those assets increase, how your fee declines on those increasing assets. And then it'll also break down each account here and then the fee charged to each of those accounts as well. So that covers the two different statements you will receive regularly from us and Schwab. And while we have you here, we just wanted to say that we know you periodically receive, other documents from Schwab, documents like prospectuses or fund annual reports or proxy voting documents. I just put this email here on what an email typically looks like from Schwab. Again, they might send you some things in the mail. Also, these are not documents that we've sent out or usually ever even have noticed that they're coming out. It's, Schwab or funds that are just following regulations by the SEC. And, good or bad, regulators err on the side of forcing these companies to provide an abundance of information to you that's, probably many, many pages long, but they're required to do so. And so certainly look through these if you're ever interested, but don't feel like some of these prospectuses and annual reports are vitally important information for your accounts. This is something that we'll reach out to you if there ever is something Schwab's contacting you that really deserves your attention. But for the most part, these are a lot of added information that you might not find a lot of value in. And so thanks again for attending and sitting through this. Again, we spent time here going over details of these documents that have been confusing to clients in the past, but I'm sure we didn't cover everything. So just know that if what we went through today didn't help answer any questions, please don't hesitate to reach out and ask. We're happy to help or just provide further details if we can. So again, if you have any questions, please ask. If not, thanks again and have a great weekend.